All right, folks, gather around. Today, we're diving into a topic that's crucial for any business, but often misunderstood. Today, we're talking about something sexy. Well, maybe not in the traditional sense, but definitely important. Just kidding, it's capital expenditure, or CapEx. Now, don't let the term intimidate you. Don't worry, it's not as scary as it sounds. In fact, understanding CapEx can give you a significant edge in the business world. Think of CapEx as the cool kid in school, the one who buys the fancy new gadgets. It's all about making smart investments. It's all about companies investing in stuff that'll last longer than a Kardashian marriage. We're talking about assets that will serve the company for years. We're talking buildings, machines, and technology that'll make them money for years to come. These are the big ticket items that keep the business running smoothly. Why should you care? Because CapEx shows if a company is serious about growth, like that friend who actually goes to the gym instead of just posting about it. It's a sign of commitment and forward thinking. When a company invests in CapEx, it's planning for the future. It's like planting a tree today so you can enjoy the shade tomorrow. These investments can range from upgrading technology to building new facilities, all aimed at boosting productivity and efficiency. And when done right, CapEx can lead to significant returns, making the company more competitive and profitable. So next time you hear the term CapEx, remember it's not just a boring financial term. It's a glimpse into a company's future plans and ambitions. So buckle up, buttercups. We're diving into the wild world of CapEx. Get ready to see how these investments shape the business landscape. Now, CapEx isn't about impulse buys like your late-night online shopping sprees. It's more like buying a house, a decision you actually think about for more than 30 seconds. Companies use CapEx for big-ticket items that'll give them an edge. Imagine a bakery buying a giant industrial-sized oven. Sure, it's a hefty upfront cost, hello mortgage payments, but it means pumping out way more croissants. More croissants, more profits, everyone wins. CapEx is all about playing the long game, folks. It's about investing in the future, not just buying another pair of socks you don't need. Don't worry, I promise no tears, so put away those tissues. The CapEx formula is simpler than you think. It's like making a sandwich, really. First, you take the change in a company's property, plant, and equipment, PP&E, which is basically all their cool stuff. Then you add back the depreciation, which is like accounting for the wear and tear on that cool stuff over time. The formula looks like this: CapEx equals delta PP&E plus current depreciation. See, I told you it was easier than assembling IKEA furniture. Section 4, CapEx versus OpEx, separating the big boys from the day-to-day. Now let's meet CapEx's less glamorous cousin, operating expenses, or OpEx. While CapEx is out there buying mansions, OpEx is keeping the lights on. OpEx covers the boring but necessary stuff like rent, salaries, and office supplies. Think of it as the boring but reliable friend who always picks up the phone at 3 a.m. Essential but not exactly headline news. The key difference? CapEx is an investment in the future, while OpEx is about keeping the lights on today. It's like the difference between buying a gym membership and actually going. Section 5, Apple's big spends, a CapEx Safari. Let's take a walk on the wild side and look at Apple, those tech wizards who can't stop releasing new iPhones. Their CapEx is legendary, like the time they probably built a solid gold statue of Steve Jobs. Disclaimer: this may not have actually happened, but with Apple, you never know. Apple spends billions on CapEx, from fancy offices that look like spaceships to top-secret research labs where they're probably inventing self-folding laundry. Why? Because they know investing in cutting-edge technology keeps them ahead of the game. They're not afraid to splash the cash to stay on top of the tech throne. Section 6, hypothetical CapEx off. Who's winning the money game? Let's imagine two companies, Coffee Corp and Tea Company, battling it out for caffeine domination. Both companies have their unique strategies and approaches to capturing the market. Coffee Corp, known for its innovative spirit, decides to invest heavily in capital expenditures, or CapEx, to gain a competitive edge. Coffee Corp goes all in on CapEx, buying fancy espresso machines and robot baristas. They believe that by offering a high-tech, seamless experience, they can attract a younger, tech-savvy crowd. Their cafes are equipped with the latest gadgets, making the coffee-making process faster and more efficient. Meanwhile, Tea Company plays it safe, sticking with their trusty kettles and teapots. They focus on maintaining a traditional, cozy atmosphere that appeals to a different demographic. Their strategy is to keep costs low and provide a consistent, reliable product that their customers have come to love. Coffee Corp might have the initial edge with their fancy tech, attracting tech-obsessed millennials who need their cold brew IV drip. These customers are willing to pay a premium for the convenience and novelty of the latest technology. Coffee Corp's cafes become a hotspot for young professionals and students who appreciate the modern, efficient service. But Tea Company, with their lower costs, could offer cheaper prices and appeal to the masses who just need their morning cuppa. Their traditional approach resonates with customers who value simplicity and affordability. Tea Company can pass on the savings from their lower CapEx to their customers, making their products more accessible to a wider audience. The moral of the story? CapEx isn't a guaranteed win. It's about strategy, folks. Each company must understand its target market and tailor its approach accordingly. While Coffee Corp's high-tech investment might attract a niche market, TCO's cost-effective strategy could capture a larger share of the market. In the end, the winner of the money game is the one who best understands and meets the needs of their customers. Section 7. The importance of CapEx investors. Take note. So, why should you care about CapEx? Well, it's like peeking behind the curtain of a company's future plans. CapEx, or capital expenditure, represents the funds a company uses to acquire, upgrade, and maintain physical assets such as property, industrial buildings, or equipment. It's a crucial indicator of how a company is investing in its future. High CapEx can mean they're ambitious and aiming for growth, which is exciting. When a company invests heavily in new projects, infrastructure, or technology, it often signals that they are planning to expand their operations, increase their market share, or improve their efficiency. This can be a positive sign for investors looking for growth opportunities, but it can also mean they're spending like a teenager with their first credit card, which is slightly less exciting. Excessive spending without a clear strategy or return on investment can lead to financial instability. It's important to differentiate between strategic investments and reckless spending. Understanding CapEx helps investors make smart decisions. By analyzing a company's CapEx, investors can gauge the potential risks and rewards associated with their investments. It provides insight into the company's long-term vision and financial health. It's like choosing between investing in your friend's guaranteed get-rich-quick scheme or a well-established bakery. While the get-rich-quick scheme might sound tempting, it's often fraught with risks and uncertainties. On the other hand, a well-established bakery with a steady stream of customers represents a more stable and reliable investment. Hint, the bakery is probably a safer bet. Consistent performance and proven business models often provide more security for investors. And there you have it, folks. The wild world of CapEx, explained without any complicated jargon or sudden urges to fall asleep. By understanding CapEx, you can better assess the potential of your investments and make more informed decisions. Now go forth and impress your friends with your newfound financial knowledge. Whether you're at a casual gathering or a formal meeting, you'll be able to discuss CapEx with confidence and clarity.